Welcome back. Another fresh week of trading, 2nd of March on Monday. And holy moly, with all these negative headlines over the weekend, Israel and the US, as you obviously followed, attacked Iran. Iran is fighting back. The Middle East, airports being closed, the Straits of Hormuz closed. Seemingly, that's the potentially actually biggest threat over the next couple of weeks, if not even month, as that would impact certain assets, which we will like to continue talking about. This week, there is not too much important data. Well, we got ADP employment change on Wednesday. That's worth a focus. And on Friday, the NFP data, which obviously kind of is as important as it has been in the past. Yet, however, the employment data, the NFP figure is obviously and was always in focus when looking back towards 2023 and beyond. We saw those figures were kind of even beyond the 200, 300,000 range on the monthly comparison. Currently, we expect, and let's move fast forward on Friday, towards the 58,000 newly created jobs figure. That's not much, but that's certainly what's on edge for the time being, and which could obviously cause markets to remain quite volatile. Let's have a look at the economic calendar. As said, this week the data is coming out on Friday, 58,000 created jobs. We could also focus as usual on these average hourly earnings, which had been not extremely volatile. And it's more in focus of the central bank in particular, Jerome, stating that the economic data, the figures, the economy is kind of being quite stable, which is only half the answer, basically. But what if inflation rises again, which we will examine further down the line in this video here for the day. But for now, 58,000 jobs being created. We got this positive surprise, basically, during the last reading last month. 130,000 jobs. We likely won't reach a higher number. However, the current market sentiment is rather in favor of the dollar. The euro obviously starting to weaken slightly. We see the euro dollar currency pair here on the weekly chart, right? So that the market is still kind of within this weekly chart downtrend here. This technical pin bar candlestick pattern might tell us that downside motivation could be on the cards. We can also observe that the monthly chart seems to be ready to fall out of this kind of slightly rising trend line. If focusing on this market alone here, we could see that the market might be ready to break higher. However, if the tensions escalate, another important part might be on the cards, as obviously geopolitical tensions causing a rise towards as well the US dollar. The greenback is expected to gear up some steam based on this safe haven status. Talking safe haven, we also see that with the attacks, oil prices are rising, as well as the gold price keeps pushing higher. Some might say, hey, how come that gold rises, but also the dollar rises? Hey, we see that the gold market is kind of on edge. If this technical resistance area breaks, the market might actually be well up and running towards even higher areas. If gold is rising, which it is currently, but the dollar is rising, the question is, what if the dollar weakens? If the greenback is losing some momentum, we might see that this gold price would even escalate its momentum further. In general, it looks like that the market is well on track to move higher. We could also kind of take a look into this based on shorter time frames. And here on the 4-hour chart, we see that the market keeps on being rather volatile, but any retracement lower, we might be keen on using towards the eventual breakouts to the upside. The trend super intact. The market is just being quite importantly moving higher day in, day out. And this triangle pattern, which we see, or we saw in the past as well, right? So whenever the market broke the upside, it might retrace, or it was retracing, and eventually moving higher. Same story here, the market's retracement or resistance, and the market moved higher again. So it might just be a matter of time when this resistance area is being taken and pushing through, that the market might eventually move towards way higher levels, as the current market sentiment currently offers us. So the market motivation, positivity in the gold price is obviously backed by geopolitical tensions, the uncertainty in markets, which is keeping traders and investors alike on edge. The oil market obviously rising higher. Quite a big big part, about 30% of the oil used in China also is being imported compared to the US. America is kind of self-sustainable in regards to the oil demand, or the local oil demand, basically. And the escalation of the war might actually, in this case, help the American economy. However, the question is, where does China import the oil from? There's several answers to that one, but important is that the current uncertainty plus the transport through the Strait of Hormuz is obviously causing the impact. We might say as traders, as we do usually, that whatever happens in markets is already being priced in. Now, this war doesn't come as a big surprise. Instead, the market was already rising back in the days. We saw it like several months, basically, if not even years. The market was in a falling trend, but with the breakout here and this being priced in, we now talk about the, say, $90 to $100 technical price and technical resistance level, which is on the cards, or it seems to be on the cards right now. However, on the opposite, on the flip side, we see as well that this market might indeed move higher. But what it does is, and that's the technical situation, the fertilizer market being super important globally. And that now causes a trend with the majority of fertilizer being pushed through some cargo ships and the high use of obviously kind of energy, right? Oil and gas in particular might kind of push the fertilizer prices to the upside. So we could be on the way, or that inflation picks up steam again. The Federal Reserve had not really kind of pushed the interest rates lower. But we might now see that in order to fight inflation, also other central banks might start to increase interest rates. But that in itself would be a negative burden, which we might see only throughout the next couple of months, maybe not weeks, but rather months, if not even years. So we would see that potentially the market demand and the general push in prices might be impacted further, despite last week we had Nvidia earnings positive, tech markets obviously kind of falling, the S&P 500 being kind of ready to break lower. So we see that in general market motivation seems to be quite interesting at the current times, and the DAX index as well being lower, but again back towards this fertilizer story, that would obviously cause inflation to rise if this is going to be the case, and that eventually will also cause the global economy to potentially actually weaken further. Let's have a look at the S&P 500 now. We see that the market is in a bit of a like quarter circle here, if looking at it from this perspective. And the market looks currently like it would maybe start to weaken further. We talked about technical levels. We could see the first one obviously would be second, if not these levels give way, would be obviously here this 50 moving average, this rising trend. However, long term, it looks like the market is just on track to weaken towards lower price levels eventually. And that's clearly what's happening as well, maybe led by other markets. The NASDAQ actually looks even to be weaker, on the weaker side of things. And if this support area right where the market started to hold off from falling further is giving way, then we could see that based on that alone, the market momentum, the NASDAQ, could actually weaken towards lower levels. The DAX is interestingly kind of holding up quite nicely so far. When we see that technical levels, and the important one being as well, the 50 moving average seems to hold here. If this level starts the market or helps the market to break higher, the DAX might actually indeed be on track to move further to the upside. However, in general, and that's the tricky situation, as we said, if the oil market rises further, this would in particular also be of substantial burden, not only for the German, but for the European economy, and hence obviously causes market motivation to be quite vulnerable for further losses. Now, Donald Trump stating in his statements early on, the Iranian leaders, the mullahs, would be close to have an atomic warhead produced in the next, or in a matter of weeks, which is why they need to fight the country. And despite obviously kind of what's happening currently, Trump's losing path within the US, Epstein files among all that stuff, now he might need as well to kind of to start a war, to deviate the situation. If you have issues within the country, you might want to attack another country, in this case kind of to prevent losing faith much. In any case, the tensions in Middle East seem to be increasing further. And that's why the situation is as it is currently, and the market motivation seems to kind of being quite interesting as well for the silver market. Silver, the demand has obviously grown over recent years, and with the technical correction based on charting patterns right now, we also observe that the silver market is breaking higher. And as any of the commodities currently, this war and an escalation of it would basically also help silver to break higher again, maybe even back towards the 100 or even beyond price levels. Looking at the charting pattern, as we said, we observe that the upside looks kind of quite intact right now, and I might say the same, which is true here. It can be seen in the charts here right now. We might need to kind of put this technical pin bar pattern really on the side, as the current supply story, not the demand slightly growing, but the supply side of things with global shipping routes being distorted might basically cause the market motivation and maybe even a bit of a melt up in this market. Silver on the higher side of things, economy somehow shrinking, but since the supply is being interrupted, silver might start to appreciate even further. Currency-wise, we talked about the euro dollar. We see other currencies which are on the weaker side of things as well. We see the pound is going to weaken further. And we observe that based on the weekly chart here, these recent patterns and support lines have broken. Now the pound is just on track to basically maybe break as well the 50 moving average weekly chart, right? On the monthly chart, the market looks also set to break back to lower levels even further. And looking at it from this perspective, we could see that the broader based strength of the dollar might be on the way. The Australian dollar as well, starting quite low, now retracing higher. If we see basically that the economic demand and in particular stock markets are going to weaken further, also the Aussie could give way. The Japanese yen is holding up quite steady against the US dollar. Well, obviously, dollar JP rising somehow, the market looking kind of quite positive for the time being. However, we had the early days in March, and our sentiment still remains in somehow favor of the Japanese yen, but maybe you might focus as well on the euro yen and the pound Japanese yen, as they could be kind of quite interesting in these markets. The euro against the Canadian dollar, obviously the currency related oil trade in a way is breaking lower. We had our entry opportunity here, guys, by the way, just focus up on our fxstrategies.asia website. We were debating about this trade and we had our sell stop in place for quite a while. Finally, a sell stop being triggered, and the market seems to be on track to fall further. The market momentum in regards to a stronger Canadian dollar, not so much oil related, more trading and charting pattern setup related, but still we might see that oil prices, if they rise, also help the Canadian dollar to benefit. The Canadian dollar is doing nothing much, which seems to also tell us that despite some strength of the dollar, the Canadian dollar is holding up quite nicely. So the Euro-CAD trade is in focus for us. Apart from this, we also have the ADP data, which is coming out on Wednesday, among other data points. ADP expected higher at 49,000 jobs. By the way, the February figure here, as always, quite a few people say the ADP is nothing else than a preview for what's going on in the NFP data. The data is being kind of procured differently, so that's not the case. We saw the February data, NFP was way lower, non-farm payrolls were higher. So we might see on how this impacts. We got the budget release from the UK on Tuesday tomorrow. Not sure if that's going to be super important, but today's information might remain interesting. PMI data, the ISM data, slightly on the weaker side of things as well, and the ISM services on Wednesday being also slightly weaker. So we see setbacks in the US economy, and this entire situation might just deviate the focus slightly. However, it's quite interesting and important to focus on oil prices, the indication what gold is doing, and fertilizer production with the Straits of Hormuz being closed. Guys, on that, I wanted to say bombshell on this, or in this nutcase bombshell, however you want to. Hey, stay safe out, everyone. Just don't forget to subscribe to our channel and please leave your comments under the video. Take care, everyone. See you soon and have a good trading week ahead. Bye.